Hello, everyone. Welcome to Forward Focus. Can everyone see my screen okay? All right, perfect. So we are going to take a look at the current markets and what we've got going on and what we have for probabilities going forward. So we're going to start with the indices here today. I'll pull up our NASDAQ. And we're going to go take a look here at some of the larger time frames first. Let's scooch way on over here. So here's what we've got going on the weekly time frame, and we've been talking about megaphones a lot lately. And what you'll notice is that we've got a big one trying to form here on the weekly time frame where, let me grab my pen. There we go. You'll notice the widening range that we've got happening here. Kind of the slowdown at the midway point. So right now we're coming back up into previous highs. A lot of people will be looking at those previous highs as a main level of resistance, and we do have them as a level of resistance, but because of the potential for the widening range as well, we also have larger resistance at a little bit of a higher zone. So let me kind of shift this so you can see this a little bit better. I'm just going to move this down here. It's going to cooperate with me. There we go. So with this kind of slowdown and choppiness that we've seen over basically the last couple of months here, it's trying a third test of highs. And what we're looking at is really around 8,400 as a much larger level of resistance now on the NASDAQ. So currently looking at the previous zone of highs as some close resistance, but the potential for a much larger level at a higher high. And that's just based upon the current momentum that we've got going on, where we have this V setup, and it's come back pretty strongly without much correction at what would be about the 50% level of the previous drop. So we did start to see a little bit of a slowdown, but it pushed past that 50% zone without the same type of congestion that we saw back here. So what I would have wanted to have seen to have this be the strongest level of resistance is basically a shoulder over here on the weekly time frame, so that we would have seen, let me drop down to daily, more of a level of correction right here. And that's what's usually going to pit this previous high zone as the major resistance level. But since we've kind of been pushing through that level with the shift in momentum here midway, even though this previous high is still a resistance zone, you have to keep in mind that the potential for that to push higher is higher now because of how this has been playing out. So we'll continue to watch this as it comes into the previous level of the previous highs, but don't be surprised if we see things shift to a point that it actually pushes through that level. Now, I'm not going to get behind a lot of larger, longer-term investment strategies at this point. As I mentioned in League of Traders, going through the NASDAQ 100 and the S&P 500, what I've seen in a lot of securities is a good deal of exhaustion. A lot of them are hitting measured move levels where we are seeing two-wave measured move points to the upside. So we do have that impulse wave exhaustion, but many of them have pretty decent momentum as they're hitting those two waves. So that leaves them to open up and widen up at highs. Let me show you guys just a couple of them where we have this happening. Switch on over here to TradeStation Fast. So if we look at, for example, let's see here. Home Depot, you can actually see this widening megaphone forming on Home Depot as well. This is a weekly time frame. Came about halfway up to where that megaphone level is, and it has this room for the second wave up. And this is what we're in the midst of right now, is the second wave. On the daily time frame, you can see a little bit of a measured move in here, but potential for that to still push a little bit higher. Let me show you some, though, that have the greater measured move on some of the other time frames as well. So Eli Lilly, measured level of resistance. You're starting to see the shift coming into play. Lows as well, measured move, but we got that blurb action, so it can still push a little bit higher. Even though this is a main level of resistance, it has room to widen up at the high. So things like 2Ts on the daily and weekly time frames, those are good strategies to watch for at this point. McDonald's is forming a 2T right now, trying to on the weekly charts. Can see that shift as it's coming out of this wedge. So you've got that measured move zone here as well, and it's kind of trying to shift a little bit here at the highs. Got Target also striking that measured move zone. So this is looking to try to go into longer correction. Now, because this is about 2/3 of the way back up to previous highs, this might go with just a little bit of a longer base and even try to put in a third push. It does have room to try to do that on the weekly time frame, or do it with a shifting momentum where we can get a 2T. But the thing I want you guys to see here is that so many of these are at these measured move levels, and even though momentum is really strong, or sorry, even though they have the measured move, momentum is really strong, so they can still continue to shift here at these highs. So we are seeing reactions when they're hitting the measured move levels, like we've seen over the last month or so. But there's room to kind of push those highs. They're basically at widening out zones. You can see here on Verizon what happened last time. It just started with a slower correction. It was able to gain momentum after it had that slow start to it, but it took a slow start before it was able to turn around. And other ways you'll get reactions where things basically just kind of widen up after the two-wave move is, in addition to the slower start, you can also get things like the 2Ts, momentum reversals, where they'll keep going to kind of higher highs, shift the momentum that way. We can even get ones that will just go into more of a trading range, longer term trading range, and then try to break out higher later on. So these are all different ways that these stronger two-wave measured moves can correct. And 2 out of 3 of them result in a decent amount of price correction coming off of them, but one of them can go and just shift and kind of push to some higher highs. That can create things like 2T patterns. So we could be looking for that in Verizon here in a month or two. But keep in mind that they're all levels that are showing us that we've got some exhaustion and some struggle here as we're dealing with these measured moves, these larger impulse moves. What you'll see on some of these as well, a lot of them actually, is that when you take into account the two-wave moves, if we look at some of the bigger impulse waves, we're also at measured move levels on those also. So that's also an indication that we've got exhaustion coming into play here in the overall market. And so many of these securities are showing really similar types of patterns, but the momentum is still strong enough that it makes it hard to get a really rapid price correction on a lot of these. So focus more on like the two-wave movements on a 240-minute time frame, where you're looking at basically these back and forth type of movements, but on a smaller scale. So we can get a number of swing trades at these levels, but they're usually going to be more swing trades that would hold for like 3 days versus some that would hold for like 14 days, or, like these here where you get like the bigger swings. They're going to be more of the corrective type of moves. So you'll get more of the corrections like this and this and this, movements that are more on par with some of these smaller impulse waves. That's what's going to tend to be more normal at levels like this in the overall market. Let's go back here to our futures. This is the S&P 500. So you can see that attempt for the widening megaphone here on the weekly time frame. We are currently striking the level of previous highs for resistance, because when we look at where this broke down, and we basically go straight across from there, we're right at the zone of that breakdown zone. So it's the lower end of what tends to be resistance on larger time frames. You can even move this down and look at, I was looking at mostly the bodies of the charts, but you can even go down and look at it from where the overall trend breaks. So you can see we're right in the middle of that zone. But what happened is that we pulled up more than 50% of this drop here and went into this kind of shifted phase where it's really similar to what happened over here. And in that case, we got the measured move breakout to the upside. This is basically a stronger version with that potential to try to do that and bring it back up into those upper levels. So even though we are seeing shifting on a lot of individual securities, I still want to keep in mind that the larger timeframes on the indices themselves have a risk against the short traders, where it can be basically a wipeout type of zone, where people will keep trying to short and short and short at previous highs because they're seeing things like the measured moves on a lot of the individual securities, and yet they end up basically getting wiped out because it keeps inching and creeping higher until it finally tries to break the upper end of the channel. So that is a big risk that we have right now in the overall market. And despite seeing all of those measured moves on the smaller time frames, you want to treat each one of those individually and keep in mind that if momentum's not picking up on something on a downside type of move, that it can easily offer a shift to break higher again. So for example, all of those that we were just looking at in the S&P 100 that are hitting the measured moves on the daily and the weekly charts, what we can often see happening here is, as the overall market still has that chance to creep higher, these things might be doing, for example, like 2T type of moves, push to slightly higher highs. And in some cases, we might actually see them go for full three-way moves. So what I'm going to be watching for is, on upside type of action, do we get shifts in momentum like this that change that overall momentum that can lead to a stronger reversal? If that happens, then those are going to be interesting. So actually, like the NASDAQ here this morning, let me show you guys. NASDAQ here. This is going to be one example of a type of pattern you can watch for. I'm actually going to go down to a 3-minute time frame. And what you'll see here is the measured move going into the early morning hours here on the NASDAQ. So this is like what's happening on a lot of those S&P 100 stocks. But notice it still crept higher. But as it crept higher, had a two-wave correction, went into kind of a longer base, and then had the two-wave measured move here, where when we transect this entire move, it shifted the momentum compared to the upside. So even though this is a pretty decent higher high here, it leads to the reversal at this point. Hold on just a second, you guys. All right, so it leads to the reversal up here, and we don't get as strong of a reversal at this point. It instead corrects through the time correction and then goes through the price correction after it shifts momentum. So this is what we could see in a lot of individual stocks right now. We've got the opposite measured move here into just like around 11:15 or so. I posted this in the League of Traders alerts where we're looking at basically that same measured move. This had a little bit of a shift in momentum on this last leg down though. You can see it really when you look at the tick charts. I have to go drop down to some smaller tick charts here. So just this slight change in momentum when we go from here down, and then you take it and look over here, you'll notice that if I try to go right through the middle, it's actually a little bit slower. It's kind of hard to see my lines here. It's not very dark with the tool that I'm using, but let me transect that move there. So it's a little bit slower. We've got the exhaustion with the two-wave movement, and in this case, we actually had a pretty decent pivot back up into this level. If you look at how this drop formed on the overall market, on the larger time frame, on the daily time frame, notice that where this formed, the right shoulder over here, was an ideal zone that makes this previous high over here a major level of resistance. So you're going to get the two-wave coming into here, a better chance of getting a little bit of a reaction off of that. This is what I was hoping we would see more of on the daily charts in the NASDAQ. It would have created just a better, more solid setup for the continuation on the upside versus what we ended up having. You can kind of see the difference here with the two-wave move here to the downside. And if it looked like what we were seeing intraday, we would have gotten the congestion here and a nice solid two-wave move for a breakout. So that's kind of the comparison that I was talking about earlier versus what we are seeing now. But this just gives you another example of how things can react off of these measured moves. But when that second move to the downside is as fast as the first, you have three stronger options. You've got the option it's going to go into more of the trading range, like we saw in the pre-market action, and that could even break lower and shift momentum like that. You've got the potential that it can do the shift like this into the lower lows, or you have a third potential movement where it will pivot off of the low, kind of get off to a little bit of a slower start, and then that can try to go and gain momentum and pick up. So you will see things that look more like a V. Here's an example of it over here, where it hit the low pretty quickly, rapid movement, and then kind of has to get choppier start when it gets off, going off of the low. Even here to a certain point as well, it shifted momentum a little bit, but not on a larger scale. So it still started off a bit slower before it gained momentum. So those are ways that we will see these measured moves pivot. The slower that shifts, the more that shifts, the better the chance you've got more of these V type of pivots. So keep this lesson in mind where you go back and you're looking at a lot of individual stocks for swing trades right now. We are at a good zone where we can get more of the back and forth type of action. We can get, two-wave movements back and forth, but there's still room for the trend to try to keep pushing on that daily chart. So don't go too overboard right now on getting really bearish, even though on monthly timeframes, we are at major exhaustions. Let me show you the monthly chart here. In fact, if you go back and look at our first forward focus of the year, we had looked at the exhaustion that we were seeing with the inflation adjusted charts and the trend exhaustion on those levels. But because it's on such a large time frame, there's so much wiggle room here at highs. In fact, even going into a higher high here on the monthly time frame, this could still be the very first portion of, oh, it could be a potentially much longer correction. You've got 3 waves of upside here on the monthly charts. The last one is a blowout move. You've got your 2-wave movement here into your highs. And this could go into these bigger swings here on the monthly chart where we see a lot more of the larger back and forth swings. And higher highs on a monthly time frame aren't really going to look too big, but if you try to look at them on the daily chart, everybody will say, oh, you know what, we've still got a really strong bull market here. And yet it could still be in this corrective phase on the monthly charts. So higher highs here doesn't mean that we are out of a correction on the monthly time frame. It just means that the range is starting to widen up here versus the really strong move that we saw over the last decade. It's crazy to think that this has been a decade already that we've been in this move. I still remember way back in the 1990s. Gosh, nothing like that to make you feel old, right? But yeah, larger time frames, larger zones of congestion here. I'm going to go to Nicole's still like 17, so she doesn't know what I'm talking about. I can pick on you a little bit, right, Nicole? 1990. Oh my gosh, maybe I wasn't too far off. I know my foster daughter is turning 20 this year. That is crazy. All right, guys. So let's see here. Next forward focus is your birthday. Oh my gosh. Well, early congratulations on your birthday. We'll have to remember, guys, next week we got to celebrate Nicole's birthday. Toni, I sound like I need more sleep. You know what, Mark? I actually got a full night of sleep last night, finally. Asthma season here, you guys. My son is keeping me wide awake this week. Let's see. What do you guys want to look at next? Shall we look at Forex? Oh, we've got some gold. Sure. So gold actually was doing a breakdown here this morning. Let me pull all that up for you guys. Hold on a second. Lift has been in play. That's why I've got this up here. We're actually looking at this on a larger time frame. Before I switch over to gold, I'm going to show you guys this quick. So on lift, what you're looking at here is we've got a bigger measured move that is hitting. I'm actually going to go up to an even bigger chart here. Look at the 2 hour, 1 hour. I think getting punchy is the word you're looking for, Mark. Getting a little punchy. So we're shifting momentum here with the 2-wave movement. So these are ways that you will see these 2-wave moves, correct? So we're starting right at a correction after the 2-wave drop here. And you'll notice that even though this has gone and hit a measured 2-wave level right here, it's still pushing to lower lows. So it could just do it with a shift in momentum like that. So if you take this flip it around on a lot of the individual stocks on the daily and weekly charts. And that's what you can get at levels like this. So measured move on that. Let's go look at our gold. And we've got the breakdown, actually broke down yesterday, but I'll show you the larger time frames here. So here we had the two-wave move we were looking at a few weeks ago. Reaction off of that. This is also another two-wave move up into here. So we are doing this descending, Alan Farley likes to call this a Hell's Triangle, this descending triangle here. These on the breakdown, because this had such a strong drop off of the high, if it tries to break down, what you can often see is sometimes they might shift momentum. So you've got to be aware that that's a possibility. If you go all the way up to the weekly and the monthly time frames, so I'm going to go even farther on here. This is our monthly chart. It's still playing around at highs. It came back up to this high. A lot of times this strategy on the monthly time frame is going to have a second wave to the upside. Now it can easily fall back sharply off of that second wave, but that's what the monthly time frame looks like. So that's at odds with what we've got going on the daily charts, where we actually have more of a bearish bias as it's coming off of the upper end of this trading range. But we want to keep in mind, again, just like when we were looking at the larger time frames of what's going on in the overall market, that this is what we have going on as the most probable outcome on the monthly time frame on gold. And it's basically like what we've got on the, clear this. So here, this is the zone that we are at on that weekly to monthly chart in gold. So you can see bonds here gave a second move up. It actually had a stronger move. That's not always going to be the case. A lot of times it can be just a measured move. And then we've got the pivot and turnaround on that. So that's what we could compare this to when we're looking at what's happening right now in gold. So smaller time frames on gold, got a little bit of bearish action right now, but on the grander scale, not as scary as what you're seeing with some of the correction here on the shorter term. Let me show you the weekly, kind of go to that midway point. So here's the weekly. So you can see we're basically in this larger trading channel here. Pretty comparable momentum back up into previous highs, and then just starting to react off of that zone, just the very beginning reaction. So this could go and do, more of a shift in momentum and still try to break higher and do that second wave up. All it needs really is a two-wave correction. It could go into an inverse head and shoulders even on a bigger scale and still try to break up again. So that has the potential on the larger time frames here. A question from Richie on using time frame charts versus tick charts. So difference in time frame charts and tick charts is sometimes one of them just will be a little bit smoother. Also, your time development factors are different when you're comparing your tick charts to your time frame charts. So for example, something might look, let's see here, you got like the 8,000 tick chart. Actually, I'm going to go down to smaller time frame. 1,000 tick chart here intraday, and you can see pretty decent swings on the intraday charts here. But when we look at things like momentum, it might look much stronger on a tick chart versus a time frame chart and vice versa. And they can kind of swap back and forth. So some might look stronger, some might look weaker, because you're taking into account what's happening in after hours trade here, in pre-market trade. So your tick bars get skewed in that time zone versus when you're looking at them on the time frame charts. So this upswing here, early morning action, you've got some slower momentum when you're looking at it on the time frame chart. So I like to look at both of them. I don't really prefer one or the other. I like to make sure if I'm looking at something that looks like a nice steady, slower momentum on a tick chart, that it's not a stronger than average momentum on a time frame chart. So like 3-minute chart here, what you'll see is that you got kind of a slower start here, slower correction. Then we've got the increase in momentum, but when we're looking at that 2T here in pre-market trade, this momentum looks, pretty decently slow. If you go and compare it to a tick chart, it'll look stronger into that high. So it can just give you a little bit of a difference perspective. Not as much, didn't make as much of a difference here today, but in some cases it does make a lot more difference. So yeah, not really a bias as far as preferring one over the other. Sometimes I see patterns more clearly on one versus the other, where if I was just only focusing on one, I would miss it. Oil, let's go pull up oil here. So oil is in wave 2 of the tilted move on the upside. So we're just coming into the breakdown zone on oil. So you're seeing some resistance there. This is another one where it can go into a longer trading range on the weekly time frame. So at this point, we could see things start to widen up again, start to see a lot more of the back and forth action taking place on the smaller time frames. Here's the daily chart. And this is a cleaner tilted phoenix because you've got a slower shift right here within the midway point. So we're right with wave 2 coming out of the continuation of the phoenix. The phoenix triggers here. And so we're right coming out of wave 2. This also has a smaller mission move at this zone. So a good chance that you're going to see a lot more choppiness on the intraday charts here. Not as great of a zone for looking at swing trades. And intraday, things like 2T patterns, avalanches, just looking at short-term moves, not really expecting bigger impulse waves, but really focusing upon these smaller ones. These are going to be more normal at this point here as we go into next week. So a lot more of the back and forth type of action. So as far as trades go, really drop down to some of the smaller time frames to look for strategies on this. Here, you kind of had, like, for example, midway zone between. Wasn't really fully an avalanche, wasn't fully a 2T, didn't have quite the higher high, but it still had the spirit of the 2T with the momentum shift here. So this is the typical type of pattern that you're going to see at this high. A full 2T would have gone like that and then turned over here. So it creates a little bit more of a trap by catching people above the previous high. That usually will get things going a bit faster. So you'll notice this got off to a slower start until the channel broke. But if it goes for more of a core 2T with a higher high, it can get going a little bit faster. And you don't have as much of this kind of indecision type of action to start with. It's an easier pattern to trade and to see. Apple. Apple is another one where we've got measured move zones. We also have a little bit of a shift in momentum here. So things are kind of starting to try to widen up at that. But because of where we are on the larger daily chart, this is one still that has room to try to do a third wave. It's not a good level for a setup for a third wave, but it had like more of a consistent base here. Easier to do that just because of where it's at on the larger trend. So because that potential is there, even though we've got the two-wave measured move resistance on the weekly time frames, you want to be aware that this can still try to push for some bigger moves. Now, it could start to swing and widen up here, but the potential is still there to try to keep going into those previous highs. So once again, use more caution on reversal type of trades at this level. Usually what you'll get will be more of the shorter term moves. So it can bring it into the lower end of the channel easily. That wouldn't have much difficulty to try to do that. But trying to get a stronger price move off of that point is usually going to be harder. So with the shift in momentum, like on the daily chart, sometimes you'll see things like two T's in here, you can pull it back down, but it's usually going to be one of the smaller impulse swings based upon more of what's going on the intraday charts than anything else. Does the NASDAQ still have room here intraday? Yep. So what you're looking at is the little phoenix coming off the inverse head and shoulders. So it's not quite a measured move, but it has really strong momentum. Let me go over here. So here is my alert zone in our League of Traders. And here is the initial push. Here's the inverse head and shoulders. And the second swing here is as strong as the first, but it's stunted compared to the first. So that can even go and has the room to push this into a longer base and then pop back up into here. So that is still a potential for the larger time frame because this is stunted. So it has much stronger than average momentum, but it's shorter than the first wave. So that has that room that this can base out and basically treat this like it's two-wave correction in here and go for another swing up later. So I would keep that potential in mind here as we go into the afternoon. What you'd need to see is basically making sure that this continues with slower congestion, last about the same amount of time as this previous zone. So this would be about the ideal zone for that to happen. If it starts to pull back a little bit more in terms of momentum into that, that might shift the outcome, but at this point it doesn't totally negate it. So I'll still be looking for that to offer up a continuation trade this afternoon. Let's see. Larger time frames. Here's what we've got going on the 20,000 tick. So what I've been focusing on most of the week is this as a two-wave move, two-wave correction in here, 1 and 2. This is first high, second high, basically potential for momentum reversal coming off of this high. But because of the draw on the larger time frames, it only made it back down to the lower end of this channel. So right now, things are more iffy on the larger time frames because it failed to offer the continuation when it got to the lower end of the range to help with this bigger 2T setup. Let me put up the template on the 2T for you guys. That is here. Try to put it under that. So what I was looking at was this kind of correction in here as this, and then this as that next move up. So right here is where we needed to see a continuation play develop, and it just shifted momentum into that support instead. So you can see that shift a little bit on the 20,000 tick. It's easier to see if you go down to smaller time frame here. So basically it needed to offer a continuation of that play at that point. So right now, there's not as strong of a bias on larger time frames for how this is going to play out because we are in the middle of these V's and inverse V's, and we don't have a shift in momentum yet. So into this afternoon, looking at that potential to still give another move up, but we might start to shift at that point, might change, go into another 2T type of move that can break down lower, kind of go correct it out a little bit longer, and then break higher on the daily charts to bring it up into that larger wedge zone. But we are basically looking at this range, and the range has gotten narrower. So if you look at this correction here, channel breaks could still go into here and still not tell us that that's a reversal setup. So you can get something, pulls up here, breaks down one more time, but it's still not a full reversal on the larger time frame because it's more of a parallel level on that larger time frame. So right now it's this rising pennant, but if it breaks, it can still hold support here. So what we wanted to see at that point would be things like, an avalanche to offer correct continuation, 2T to offer a larger correction. Both of those can bring it lower, but it would just be focused on intraday type of corrections because of this larger daily chart. So what I'd be looking at for corrective type of moves would be things that are going to be closer to like this and this, and these moves in here. And then even holding within that wider pennant as well. So this can still go back and forth in here and still manage to break higher on the weekly and monthly time frames. So just looking at these shorter little impulse moves right now, not really focusing on any bigger time frame for setups than that right now. Let's see, you guys have any individual stocks you want me to take a look at? Or individual Forex pairs? IBM. So IBM is another, only has one main swing up, kind of shifting momentum. This is what we call the wipeout zone because it can go either way and it tends to trap traders a lot more. So traders will focus on one direction and keep trying to go in that direction and take stop after stop after stop, only for it to flush, maybe then continue in the direction or even totally reverse and give you a larger correction. So it's one of the most difficult zones in the market to trade when we're looking at what's happening on the daily chart. Let me see if there's anything that can give us a better idea on different time frames. So monthly looks higher. Daily momentum is still higher, but the way this is formed here, it's that same pattern as on the NASDAQ. So here's the bigger correction, and then here's the smaller channel. So the smaller channel can go and widen up into a bigger channel. So even though the larger charts still look higher, that doesn't protect this from a flush on the daily time frame. It can still easily come and flush back down into here. So this is a level where breakouts, you want to be more cautious with them because they can have a greater chance of shifting momentum and failing. Roku. So Roku, this is kind of like where IBM is on the weekly time frame, is like right in here on that same potential pattern for continuation. Roku, not really doing too much different than what we were anticipating over the last month or so. It has the two-wave move on the upside, and then it's trying to break, but it's doing it with the shift in momentum. So you've got to move all the way up from the upper end of the range to the lower end of the range and then the breakdown. That's always harder to trade in that zone. You're actually coming into a do or die point here on the 240-minute chart, where it's going to have to try to decide, is this going to go for wave 2 on the downside, or is it going to hold with the momentum shift and bring it back up? So setups on this level at this point, let me go down even smaller. We call it do or die point because see this momentum shift here? You've got the back and forth type of moves where you're right at the third low, even spacing between the lows. So this can try to hold and bring it back up into the range since it's wave 2 on the correction on the bigger downside. But if it breaks, then it can go for another extreme momentum move on the downside. So it's a really core zone here to watch to see if it manages to hold or not. On the intraday time frame for like a momentum reversal type of play, you'd watch for things like smaller time frame phoenixes. But then keep in mind that if they start off slower off of that level, what can happen is they might go into just like a little more of a base like that and then still break lower. So really core point here on Roku. Apple short term. How short term are you looking at? 60-minute, we're right at a measured move, but it does have room to do another rapid drop. So if you're looking at this high, it can go and do like a 1, 2, 3. That can bring it back down into that zone. It is right at measured move level. So again, this is a do or die point here on Apple. Let's see, this is a 60-minute. I'll go down even smaller. So 15-minute has that too. It's kind of got that shift where it's trying to gain momentum here on the downside. So this could go and give you another drop like that. Right now, the rest of the day, probably more of a range-bound type of day. So I don't think you'll get, much for setups here. Intraday, just totally scalpish. A little bit of shift. So this could turn over and bring it back into that previous low. Here's the measured move into the low this morning. So rounding off, this could still drop here into this afternoon again. I would expect previous lows to be pretty major support though, because what I want to see on the bigger time frame to get the continuation is a little bit more congestion. So something like if it tried to do like that would be good for continuation on the short side. With just one swing up and the shift in momentum here, you're at, again, one of those wipeout zones because you don't have a clear reversal pattern here, but it doesn't really have anything forming a clear continuation pattern either. So with only one major swing up, the main risk on the short side is that this could try to go for that second swing. And this risk, this wipeout zone risk comes into play because you're looking at just one swing and then you got a shift in momentum. So with just one major impulse move and then a shift in momentum, it can try to go and hold in the congestion at the lows, especially when it's shifting momentum and it's under that 50% point for this drop. So 50% retracement, it can still shift and hold into this lows. But because it is a shifted momentum and it does only have one swing up, it has the potential of being a tilted phoenix. A stronger phoenix where it's much more obvious what it's going to do would be to go into a base like that. And then you get a much more obvious secondary move to the upside. But with that shift in momentum, it opens the door for it to go either way. And it's usually just a change at the very end of that choppiness that determines which way it ends up fully breaking. So it's a much harder zone to trade intraday. For newer traders, this is the type of action I recommend most traders just totally avoid right now when you see this happening. Just sit on the sidelines, watch it. You can sim trade it, but don't play the actual action because you do have much more of a chance of getting chopped up in it. I use what I call advanced trade management at levels like this. So I'll take them in a direction, I'll scalp really fast to kind of shift my risk to reward ratio. So for example, trying to short off the upper end of the channel, take gains off the lower end, short again at the upper end, take gains off the lower end. And then if it shifts, I can add back in and get a full move so that I can ride it on the downside. But if it goes to the other way and turns around, I can end up with more of a scratched trade versus a full-on stop. So trickier time here. JNUG, gold miners. So our 2T, 15-minute, right at a widening up zone. $60. This still looks lower. So we've got kind of like the same thing going on with the daily on gold. So here, if you look at the distance between these lows here, where it's trying to break, basically this can break at this point and go for a measured move here, but it's going to find major support at this point. So usually with like a short on something like this, if I'm on the short side, I'm going to take off part of the trade as it hits the previous low, just in case it goes into more of the longer chop. But there is room for this to go and do that full larger measured move. So it's going to be a lot riskier to go look for buy setups at this point, for reversal setups, because more of the reversals or corrections will tend to be choppier at this point off of support, tend to be a lot more of like back and forth type of action. And even when you get situations where they gain momentum, it tends to be things like this, you know, where it chops around and then tries to gain momentum later. So good support level, but still definitely room that this can go and do another drop. The Bitcoin. So we talked about this a while ago, actually quite a while ago, even a year ago on the Bitcoin. What happens on things like this, they move up like that, and then they'll come down into these levels where you'll get these like slower pivots or like smaller pivots. And then later on, it might, you know, try to regain some momentum again. It's harder to fully do this entire move, but it can go and shift again later. I need to kind of like move this so I've got more room to draw. Here we go. Let's just move this over. So longer term outlook, what you usually get are things like this. They'll kind of do like these little shorter pivots. And then at some point, they can go and regain strength. They might even go and, you know, fully have a really nice trend move. But that's what happens when you get these blow off type of moves. So a lot of the cannabis stocks are doing the same type of thing, TLRY, on a smaller scale, but you can see here TLRY, it'd be more on the daily versus the weekly. But with the Bitcoin move, like right now, it's a lot like what's happening in here. So you can get two wave movements kind of back up into the previous channel level. Let me flip back to the Bitcoin so you can see that. And on the weekly. So see that channel right here? That's like on TLRY. So this is basically just kind of one swing up. So it does have that room to do the second swing, but it will have a really hard time trying to break through that previous high there. So that's what I would be looking for on Bitcoin on kind of like a little bit of a bigger scale here. Now on the daily time frame, we don't really have much of a continuation quite yet, but it is at a zone that it could try to start. Let's see, 4 hour. I don't see anything here yet on 4 hour. But what you will see here is that, see this widening correction, and then we had that kind of narrower channel, just like what a lot of the market is doing, and how it pulled down to the lower end of the channel and is now reacting. That's exactly what I was drawing earlier on the other securities. So you're right at that lower channel level. So this can go and shift here, maybe do something that can try to give it another swing on the daily charts. but right now I really don't see anything quite yet on the smaller levels. We're at, good support here. Kind of missed the 2B. So here's your 2B. You get your low, you get your slightly lower low. 2B into Phoenix. Again, shorter stunted move here, just like what we saw on the NASDAQ. So that can go and try to do another move here this afternoon. You can see NASDAQ's actually breaking a little earlier than I wanted, but you can see the NASDAQ trying to do it. Ideally, the base is the same amount of time, and that's going to give you the strongest breakout with the least chance of it being a false early break. And that's when this is larger, this is smaller, but the smaller move still has as strong or stronger momentum than the first one. You want that same amount of time correction and then the breakout, and you'll usually get a pretty decent move on the breakout. So that's what the Bitcoin is trying to do here as well on the 30-minute chart. The peso. So it's coming into measured move on the daily. Oops, I hit something in my list. The monthly, yes. Monthly looks lower. So it's trying to do a little bit of an avalanche type of move here. With the extreme momentum here, greater chance it could go with a slower move. It might not, fully go and crash, but it definitely looks lower on the monthly. So I think what's going to happen here with the daily is you're going to have like this choppier start, but then the potential that the momentum can pick up again. So it can even do like more of the back and forth moves like this here, but then go and gain momentum because of where it's at on the larger monthly and weekly charts right now. And one more for you guys, BSX, Boston Scientific. I haven't done anything in this for a long time. Hold on, go up to the monthly on this one. This was one of my favorites. I actually gave it as a long-term buy setup way back in 2012 here. Because nice shift in momentum. And see this little spike and jump here? This is what I was talking about with like even the Bitcoin, where you get like these bounces. It'll go back up into the congestion zone, can do like this slower little bounce, and then at some point, sometimes they go and take off. So it's actually exactly like what we were looking at when I drew that for you on the Bitcoin. But we're in a blow off top here. So this is a really good strong level of resistance here. You can see that shift in momentum, kind of that measured move. So this should go and do a widening up in the channel. At this point, even look for the potential to come back to the lower end of this channel, around 35-ish on the monthly. So RA, what you might be missing is just this larger time frame. So it's coming into the main resistance of the previous highs here. And you also have essentially measured move type of zone. Even though the momentum is a little bit stronger, it manages to go a bit past the measured move. You're still looking at this as like wave one. This is your correction, and then this is wave two. I know it's a totally different way of looking at trend moves than a lot of you might be used to, but it's because this is a stronger move, and then you've got the channel in here and shifts, and then it breaks out and confirms the break in that channel right here. Kind of draw that a little clearer for you. Right there. So it breaks that upper channel that I've been trading in. So at that point, the new target level becomes looking at this as the move going into it, and this is the move coming out of it. So this is the shifting momentum zone here. So you'll probably see a lot more back and forth action. It can still head higher, but the corrections in here to kind of shift the momentum again are going to be normal. Mark, do I trade Forex as much as I do the indices or the regular futures? Lately I haven't been. When I lived on the East Coast, Eastern time zone, I did a lot more. And I would say probably about, 8 years ago or so, I did probably about as many Forex trades as I did futures trades, just because of when I was when the hours that I was trading. It's not that I have a preference for one over the other. It's just whatever is most active when I happen to be at a computer. So it's not that I necessarily like one better than the other. It's just what time am I available? So if I'm sitting here late at night, I'm focusing more on Forex just because I get a little bit more action. Is there a problem with spreads in Forex? Sometimes. I mean, depends on which pair you're trading. Absolutely. Also, the time frame you're looking for strategies on is a big deal. When you're looking at things that are kind of forming over multiple days, the main risk that you can have is that you can get some sharp impulse moves that are taking place overnight. So 3 in the morning, you might get a really strong impulse wave that if you're not there and you've got an open trade, it can be really difficult on your positions. Not good for scalping. The majors are okay if you stick to when the markets are the most active. So you might be mostly better off if you're playing like the European market for a lot of them. Does my method change when trading Forex versus switching to futures? Not really. I mean, I look for the same type of strategies. Time frames can change. I mean, that's mainly the bigger difference. I do a lot more scalping in futures than I would on Forex. You're very welcome, gang. All right, so we're going to wrap up Forward Focus here. I'm going to get that posted on the website. You will be able to find the replay at tonihansen.com/Friday is the short link. So if you go and bookmark that short link and you're looking for the replay over the weekend, that's where you're going to find it at. Let me post that in the room. Chat www.tonihansen, I can spell my name properly, .com/Friday. Oh, and Mark, lack of sleep doesn't necessarily mean that's the reason why I'm kind of punchy. That's just part of my personality too. Too much sleep, too little sleep, too much coffee, not enough coffee. It can all yield the same crazy remarks. All right, everyone. Have a wonderful weekend. Thank you for those of you that are checking in on my little guy. He slept through the night last night, so woohoo! Those of you that are in the League of Traders know we've been in the middle of a really bad asthma flare with him since last Friday. Really scary. Couple trips to urgent care, lots of changes in his medicine. We were not prepared for allergy season in Tucson. But yeah, now we at least know for next year. So hopefully we can avoid it the next time around. Multiple days with very, very little sleep. He's excited because this means that he can go back to his swimming. He missed all of his swimming this week and playing outside, of course. All right, everyone, have a wonderful weekend, and I'll see y'all back here next week.